Well, I think Chris Waller is reflecting on the fact that maybe they've gotten a little behind the curve. They've tried to catch up, but they're not there all the way. So I think that's the right direction. A little bit more at this point. I think by 3% at the end of this year would be a way to go. Maybe even more than that. But by any measure, given the inflation rate, given the state of the economy, the Fed seems behind the curve, and that seems to be the lingo that's capturing the day.
Mr. Taylor, do you believe they should have gone 50 from the get-go from March?
I do. In fact, I've been arguing for a year now that they're a little behind, and more they're getting behind. We have not seen this big a gap between what the right rate should be and what the actual rate since the 70s. And so it's a danger, and I think they can close this gap by raising rates. They don't have to be dramatic about it, but they have to be predictable so that people know what's going on. And I think that's what's good about the other members of the FOMC are making commentary so that people can see there's actual disagreement. In fact, there's a lot of disagreement out there in the marketplace. I've been hearing a lot of people commenting on the fact, yes, you're right, that's what they should be doing. Why don't they go ahead and do it? And I think there's a lot of questions about that are being raised, including by you.
I got to ask you, though, you have to admit that the situation that we're in, very, very high, highest inflation in 40 years, very much supply side driven. There's not a heck of a lot that monetary policy can do or should do about it.
No, I think it can do quite a bit. You know, part of the price shocks, what's going on in Ukraine, you take that into account. But even when you do that, they're still quite behind. And again, this is a lot of formulas, a lot of rules. Somehow the Taylor rule becomes more popular at times like this when the Fed is very off. And so they can do it. It will tame inflation. And I think if they do it in a predictable, gradual way, it will do the trick and will keep the economy going rather than to have a pullback, which we certainly don't want to have.
All right. How aggressive do you think they should be or need to be on the balance sheet, reducing the balance sheet?
I think the balance sheet is not the full story. They're stopping the purchases. They've said at the next meeting they'll actually show how much they're declining. But the real trick now, the real thing to focus on is the federal funds rate, starting to move it up. It's not as high as some like. I think it should be even a little higher than what people are saying. So I think the balance sheet is not the main factor. I don't think it did much good. I think if they gradually reduce it, it'll be beneficial. But the main thing to focus on is the federal funds rate and what goes into that calculation.